Hi, everyone. My name is Matt Brown. Welcome to the Direct Private Investment Show. With me in the studio is none other than Bruce Roberts, the CEO of Carofin. Bruce, welcome to the show.
Thank you, Matt.
So today we're going to be talking about the 5 key elements of private investing, I should say. I'd love for you just to paint a picture of how did this come about?
Well, we see lots of deals, and so we're always looking for a framework or a process by which we can initially evaluate the deal. By the same token, our investors are seeing a lot of transactions from us, and so we're trying to give them kind of an initial first cut on what's the totality of this transaction. What's on the table, and that way they can keep looking, keep digging deeper, or they move on.
So where does this start?
Well, I would say the first element that we look at is the use of proceeds, or what's the money being used for. If you know how much money they're raising, how it's going to be spent, that tells you an enormous amount about the stage of the business. Is it working capital because they're just losing money? Is it buying a piece of equipment? Are they buying another company? Or, what you need to be careful, are they taking money out of the business and cash out of the business and paying back themselves or other investors? Now, if you're putting money in a company, you'd like to know that it's going to build the company, particularly if you're an equity investor, right?
Yeah, you would hope so.
Right. If you're a debt investor, there are some legitimate reasons for people to make distributions or recapitalize the business, and it reaches the strength you can do that. But it's equity, forget it. I mean, the money needs to stay in the business.
Mm-hmm. And so where does the story go from here when you look at different types of issuers?
Yeah. Well, the second question is, who is the issuer? Yeah, to your point. And that's both at the corporate level. Is it an American company? You might want to question. There's a lot of people out there looking for money, from Nigeria. It seems like it's been with us for a while. I know I've been getting emails for about 15 years, a lot of princes. But obviously that's an exception, you would think. But what is it about this company? Where are they incorporated? How long have they been around? And of course, who are the managers? Who are the people, right? What's the history of that company in terms of prior financing and what have you? But that one line, who's the issuer, goes a long way. What industry they're in, et cetera. So,
And when it comes to the types of securities being offered, what do we need to know there?
Well, you really should be receiving a summary of terms or a term sheet, as we call it. And whether it's debt or equity, that's going to lay out the basic tenets of the deal. It's not a legal document. Even if people sign it for some reason, it's generally it's not a legally binding document. You need a much more comprehensive level of documentation to support the transaction. Again, whether it's debt or equity. But, most, mere mortals can't figure out from an operating agreement or a loan and security agreement exactly what all the tenets of the deal are. And so you should see a term sheet that really lays out the principal conditions. And then, you should have someone representing you who's used to looking at these documents confirm that what you think you're investing in is in fact what shows up when it's ready to sign on the dotted line, right?
And from an investor perspective, is this then not the right time to then be thinking about repayments and what that looks like?
Yeah, that's number 4. And oddly enough, a lot of times people don't cut to that chase. And, there's the euphoria of, oh, what an exciting business and what interesting people. But, that euphoria generally wears off after a few years that you've had your money locked into some little company. So I find that right up front, it does make sense to make sure you're in alignment with the liquidity path that at least we're all targeting. So I'll give an example. One question I often ask an entrepreneur is, what's your number? And what I mean by that is, what do you personally need to take out of this business? If, say, we're talking about equity in the sale of business, what do you personally need to take home for you to feel like this is successful? It's obviously a very different conversation if it's 5 million versus 50 million versus 500 million, right? Because it kind of gives you a sense of, is this a company's got a realistic path to liquidity that's going to get me my money back? Or, are there visions of world domination here? And, enough may never be enough, right?
Or grandeurs of world domination.
Exactly. Well, but, some niche world domination, right? And then, since it's, it is the 5th one, I would say risk. So once what the money's being used for, once you know who the issuer is, once you know the security that's being offered, once you have some sense of how do they think they're going to pay you back, what kind of glide path are they on? If it's debt, it's going to come out of cash flow, presumably. If it's equity, it's some future liquidity event. Then that gets you to, well, okay, what risks kind of jump off the paper? And what risks are most relevant really depends on the deal, on the industry. I would say anytime you're seeing regulation as a critical part, it kind of cuts both ways. Regulation can be a barrier to entry, but if you haven't passed that barrier to entry, then regulation can be a deal stopper in terms of the business ever advancing. Future capitalization can be a risk. I mean, if you're particularly for an early stage business where, if you're a seed investor or you're that early round investor and any projection they shows they're losing money and shows they're going to have to raise more money to keep the lights on and further the advance, well, you need to dial that in, right? Because it could be a terrific little business that wants to be a bigger business, but the party writing that bigger check, you just don't get there. There is and it is serious, there is a level of fraud in this sector of the market. By any measure, securities fraud is a felony, and private securities are no different than public securities in terms of material omission or fraudulent misstatement. Personal background checks on all the parties involved is a must. Don't rely on just a Google search to do there. We've invested a fair amount of money in different database searches that go a deeper level. If there has been litigation, for example. So we're doing criminal background checks, liens and judgment searches, and the court transcripts can tell you a lot. We once avoided one deal because we did find out through a search that the individual who was the CFO of this company had in the past sued his prison warden while he was serving time for securities fraud, because his prison warden wouldn't let him order Domino's pizza, right? So again, you can't make up some of the stuff you run into in this business, but it is no laughing matter. I think I can count at least 5 times when in our history we've run into somebody, 4 times where they had a criminal record and we caught it and we exited as quickly as we could. One time where they didn't have a criminal record, but unfortunately the transaction itself was a problem, and he ended up in prison. So it's real. It'll ruin your day. It'll chew up a part of your life that you don't want to get caught up into. But I don't want to dwell on that too much. It's not everyday common, but you just don't be naive. It's there.
Yeah, it happens. Yeah. Right. So basically, Bruce, let's recap. So it's about why is the capital being raised? It's about who is the issuer and what's going on there around the issuer. It's looking at the type of the investment security, equity versus debt. It's looking at the repayment plan or payback period. And then, as you touched on at the end there, it's really about understanding the risks. And it's important for our investors to know that those are the key 5 elements to make a successful private investment.
Matt, you're hired.
Bruce, thank you for being on the show. Thanks everyone. We'll see you again soon.
Cheers.